Good morning, students. Today we are going to read a very important topic, that is profit and loss account. This is technical topic, so concentrate yourself. Profit and loss account. And in this topic, first we will read making decisions. So some decisions are required. First decision that is required is how does a business and its competitors assess whether it is trading successfully. Next is how does an individual or a pension fund manager know which companies to invest in the stock exchange. Next decision required is how does the tax authorities know how much tax to charge a company on its profits. So these are the decisions which are requiring some documents, some knowledge. So one way for them is to look at the profit and loss account of a business. The business itself can also use its profit and loss account to help it make decisions now and to plan for the future. Next thing that we are going to read in profit and loss account is its uses. The profit and loss account is a record of revenues and cost of the businesses over a period such as a year. It shows how much profit the business has made over the past year and what has happened to the profit. This is the definition of the profit and loss account. The profit and loss account is a record of past cost and revenues. However, it can still help people in the business to make decisions about the future because the account says something about where the business has been in the recent past. On the whole, though, other financial data such as cash flow forecast are far more useful than the profit and loss account in helping businesses making these decisions. More importantly, the profit and loss account is a summary of the recent business events for the owners of the business and anyone who might want to invest in the business. So these are the uses of the profit and loss account. Shareholders in limited companies, for instance, are particularly interested in trends in profits because they determine in part how valuable is their share of the business. Profit and loss accounts are also used by the tax authorities to assess a company's tax. Other businesses may also look at the company's profit and loss account for the previous year to judge whether it is safe to give it credit. So these are some of the uses of the profit and loss account. The sample profit and loss account is shown below. Here is the profit and loss account. Brackets around a number means that it is minus figure. For example, sales turnover of a business is 2455.1 million pounds. Cost of the sales are 1739.7 million pounds. That will be subtracted from this figure. After that, we will get this, that is gross profit. Operating cost for the business is 603.8 and other costs are 17.2. When these two figures will be subtracted from the gross profit, we will get net profit. Taxation applied on the business is 34.1 million pounds. Dividend given to the shareholders, that is 72.9 million pounds. When these two figures will be subtracted from the net profit, we will gain this figure that is in negative, that is the retained profit of the business. The profit and loss account can be split into three parts. First part is the trading account. Second part is the profit and loss account. And last part is the appropriation account. Now we will read these three parts one by one. First is gross profit. The first part of the profit and loss account is the trading account shown in the table below. So this is trading account. This shows the sales turnover and the cost of the sales. When this figure will be subtracted from the sales turnover, we will get gross profit. This portion is called trading account. Note, bracket around a number means that it is a minus number. The trading account is a record of sales turnover and the cost of the sales. Sales turnover is the value of the sales of the business, whereas cost of the sales is the cost of the production. This included buying in raw materials as well as employing workers to manufacture products. These are called cost of the sales. The trading account shows the gross profit of the business. This is the profit made before the overheads of the business are taken into account. Gross profit is defined as sales turnover minus cost of the sales. And the formula is here. Gross profit is equal to sales turnover minus cost of the sales. Next part of the profit and loss account is net profit. The second part is the actual profit and loss account. It involves calculating net profit. This is shown in the table below. In this part, profit and loss account part, we subtract all overheads from the gross profit. So distribution cost, administrative cost will be subtracted from the gross profit. We will get this. No, this is interest received, interest paid, profit on loss, profit on sale of the fixed asset is here, and others are here. Settling down all these figures, we will have 94.4 million pounds. This is net profit. Remember here, interest received will be added, profit on the sale of the fixed assets will be added, and other profits will also be added in the gross profit, and subtract all the overheads from the figure. We will get the net profit. Detail is here of the profit and loss part of the profit and loss account. Net profit is the profit made by the business after all its costs have been taken into account. So it is revenue minus both the cost of the sales and all the other costs of the business, the overheads. Not all the revenues of the business is sales revenue. This is very important part. For example, in this sample, we have added the interest received and the profit on the sale of the fixed assets. So this is the explanation now. Not all the revenue of the business is sales revenue. Table above shows that, for instance, received interest on money which it had deposited in the bank and elsewhere. It also received cash from the sale of the assets like factories and land. Other income may be profits of the subsidiary companies. For example, these non-sales revenue need to be added to the sales revenue in order to be able to calculate net profit. Equally, not all costs are the cost of the sales. Operating expenses or overheads are the costs which are not directly related to the production. Table above shows two different operating costs. Number one is distribution cost. These include the cost of the marketing and selling products. And second is administration cost. These include the cost of employees not directly employed in production. For instance, the salaries of the directors of the company would be an administration expense. It also includes all the other costs of the administrating the company, such as the cost of running the headquarters of the company in London. Net profits can be calculated as gross profit plus non-sales revenue minus operating costs. Next thing is the appropriation account. If the business is a company, then the profit and loss account will end with figures which show where the net profit has gone. This is the third part of the profit and loss account called the appropriation account. Net profit can be distributed in three ways. Very important part this is, this frequently come in the paper, this question. Net profit can be distributed in three ways. First part of it has to be paid to the government in taxes, mainly corporation tax, a tax on the company profits. Second, the company may distribute part of the profits to its shareholders in the dividends. And third, the company can retain, keep back some of the profits to pay for new investment in the company. This retained profit is the main way in which business tend to pay for new investment in the UK. For example, table below shows the appropriation account. Here is the appropriation account. Up to here, we get the net profit. Now from this amount, taxation and dividends will be subtracted, and this figure will be obtained. This is called retained profit, but this is in negative now. It paid £34.1 million in taxes on profits and distributed 72.9 million to its various shareholders. It paid out more in taxes and dividends than it earned in profit. So instead of retaining profit, it took some of the money that had been retained in previous years and used this to pay for part of the taxes and dividends. Okay, the next thing which we are going to read in the profit and loss account is depreciation. Any business owns buildings, machines, cars, and office equipment, etc. These wear out over time and, as a result, fall in value. This fall in value is called depreciation. It is counted as a cost because the fall in value is what it is costing the business to own and operate these assets. Some businesses include depreciation in cost of the sales in the trading account. Sometimes it is included as an overhead cost. There are different ways of calculating depreciation. Now we are going to read different methods of calculating depreciation. One way, called the reducing balance method. It is simply to take off a percentage of the value of any asset like a machine. For example, 10%. For instance, a machine costing £100,000 and depreciated at 10% per year. So this is the fixed percentage which is according to which depreciation will be calculated. Would suffer depreciation of 10,000. This is the calculation in its first year. Its value would be therefore then be 90,000 in the beginning of the second year and up to so on. This is the first method of calculating the depreciation. In the second year, depreciation will be 10% of this, that will be 9,000. So 9,000 will be subtracted from this. So 81,000 will be the value of the total assets in the beginning of the third year, and up to so on. Next method is called the straight line method. Say a machine was bought for 110,000 pounds and would be sold for estimated 10,000 pounds in 5 years' time. So it means depreciation will be 100,000 pounds. The business would therefore use up 100,000 pounds worth of the machine over 5 years. On this method, it would depreciate the car at a fixed 20,000 pounds each year for 5 years. So 100,000 pounds will be equally divided in 5 years and will be depreciated, will be considered as depreciation. Next topic which we are going to read in this topic is cost of production and stock. The cost of production used in a profit and loss account includes not just purchases made by the business, but also changes in stock. Stocks are raw materials and finished products like thread or clothes, which the company has in store. The raw materials are waiting to be made into products. The products are waiting to be sold to the customers. Courts Vela started its financial year in 1995 with 512.7 million pounds of the stock. It ended its financial year 1996 with closing stock of 474.4 million pounds. So this figure will be subtracted from this. So its stock level had fallen by 38.3 million pounds. Since stocks have fallen, some of what was sold in 1996 was made using materials bought in previous years. Hence, the cost of the sales must be increased by the amount of the fall in the stocks, opening stock minus closing stock, to calculate the cost of the sales. Alternatively, if stocks had risen, the cost of the sales would have been reduced by the amount of the fall in stock to calculate cost of the sales. Formula is cost of sales is equal to cost of purchases plus opening stock minus closing stock. Now we are going to read some key terms for this lecture. Appropriation account. The part of the profit and loss account which shows what has happened to the net profit. Change in stock. Closing stock minus the opening stock. Next is cost of sales. Cost of production such as raw material cost, direct wage cost, and changes in the stock. Next definition is depreciation. The fall in value of the fixed equipment and building over time as they wear out. Next definition is gross profit. Sales turnover minus cost of the sales. Next definition, net profit. The profit made after all the costs and revenues have been taken into account. That is gross profit plus non-sales revenue minus operating cost. Next definition is profit and loss account. A record of the revenues and cost of a business over a period such as 6 months or a year. Last definition for today's trading account. Part of the profit and loss account which shows sales turnover, cost of the sales, and changes in the stocks. And finally, I have made some questions from the lecture. Solve these questions at home. These questions will help you to handle the paper, particularly in this lecture. The first question is, who might look at the profit and loss account of the company and why? Next question is, what is included in the trading account? Next question is, what costs are taken into account when calculating net profit? Next question is, explain two ways of calculating depreciation. Next question is, describe three types of the operating cost. Next question is, why would an increase in the non-sales revenue increase net profit but not gross profit, assuming all other costs and revenues stayed the same? Next question, explain how a company uses its net profit. And the last question is, how do changes in stock affect the cost of the sales and the gross profit? So students, this was the topic. This was the lecture today. Tricky topic, technical topic. Read this topic very carefully and make your notes. Thank you so much.